Welcome to another S&P 500 analysis. Today is February 1st, 2023. Today we got the FOMC announcement and we also heard what Jay Powell have to say. Now let me replay the price action of the SPDR, the SPY, the ETF for the S&P 500 before I ask you this question and before we go and take a look at the price action in a little bit more detail. So there you have it. That's the replay of the price action. You notice this is where the FOMC announced that 0.25%, and this is when Jay Powell start his press conference. And as this press conference move along and sounding a little bit more dovish, and also sounding more a little bit of get ready to pause or something like that, that kind of got the market saying that, hey, maybe we are going to get a soft landing. So we'll see. But right now, we're going to take a look at the price action and see, are we really going to go to the moon, or are we going to get ready for another bull trap to get snapped? Now, let me bring your attention to this chart here. This is a tick chart. This is 1600 tick chart. Now, for those that are unfamiliar with what a tick chart is, this 1600 represents 1600 trades. So each one of these candles doesn't get formed until 1600 trades have taken place, in regardless what the volume is and in regardless how long it takes. So it kind of filter out some of the noise and it be time independent. And the thing is, I want to bring your attention to this chart is that you could see here on this the SPY chart here, you see it is forming a little bit of a head and shoulder pattern. Now this is the after hour and the overseas trading. Right now, it is almost midnight, on the West Coast. So that's close to 3 o'clock on the East Coast. And the Asian market is trading this right now. And for the ES, we're going to take a look at the ES just a little bit later. Then pretty soon the London market, the European market is going to open for trading. And we could see a little bit more price action here. So I just want to bring your attention to this. And the thing to watch tomorrow, you see this right here, this low here. We see the buyer came back in and start buying it back up on this low. And then the seller came in right here, after the buyer basically have exhausted up here, then the seller took over and took control. And then it's just kind of, level off and into the close. Then you see here on this spike here, that's when Facebook or Meta announced its earning. And basically, it's not the earning or the guidance that actually moved the stock. It's more of that $40 billion buyback, stock repurchasing, buyback is what really moved Facebook. And right now you can see that, the SPY actually came up and then, you got seller here trying to sell it. And then the buyer stepped back in right here, and basically it's right near the above the close here, this pivot high here before the close, and the buyer just bought it back up. So now we at the overnight trading, we see that right now this is a indecision candle, and right now we got the seller seems to be trying to take control of it. So again, tomorrow, the key thing is to watch this level here. And this level, let me give you this level on the SPY. It is the lowest 409.59. That's the level. So based on the price action, we're basically looking at this right here. Right? If it got dipped below here, then we got the seller back on control. And we probably will take this down. And we do a major move of the head and shoulder pattern, which I will do just a bit. And if the price could come up and take out this high here, then the bulls or the longs will be back in control. And we could see this thing move up toward the possibly toward the 420, but it won't get to the 420. I will show you a chart of what I think the upside might be if it's going to go up because of tomorrow's OPEX. So let me go and give you the major move here, head and shoulder major move. And we assume this is the neckline here on the neckline break. And here you see that the 100% major move, it will bring it down to 406.29, okay, which is today's or yesterday's IB high. So just keep in mind 406.29 or just 406. Now let's take a look at the E-mini S&P 500, the ES. Let's focus on this chart here. You can see that I also use a tick chart here, and this is a 10,000 tick on the E-mini. And here's the neckline here that I'm looking at, this head and shoulder pattern. Right now, this right here is forming this left shoulder here on the in the overnight or the in the Globex market. So looking for this thing to break, and this is the pivot low that we want to keep an eye on, and the pivot high here. So the level is, let me see what that level is. So that level, the low is 41.2175, and the high over here is 41.6325. So look for these two levels. If it get below this low, then the bear is in control. And if it get above this high, then the bull is in control. Oh, before I leave this chart, let me also set up the major move of this head and shoulder pattern. So we see the major move, the 100% is 4,088 and 3/4. Now, I want to bring you to your attention to this market profile chart. On the market profile chart here, we have some single print from the Fed day right here between 41.16.5 to 40.90.75. And look at here, this 100% major move is 4,088.75. So if tomorrow it come down, or in the next couple of days it come down, fill the single print, or do this this head and shoulder pattern major move, then the single print will get filled. Okay, so watch these level here for tomorrow. If it come down, then most likely we will see some of these print. Now, it did try to fill some of these single print from August, end of August. So we still got some single print up here that need to be filled, in addition to another set of single print. But we're gonna leave that for now. We're not gonna discuss those yet unless it put them in play. Then I will do that in future video. But right now we're basically focusing in this area here. Now, also in addition to that, I also mark off the FOMC level right before the announcement. Right, that is 40.73, because that's what we call the scene of the crime. So look for this level to get retraced or get tagged. Okay, so those are the ES and the S&P 500 ETF, the SPY. Now let's go and take a look at the market sentiment and the internals. Now here we're looking at the VIX here. The VIX is actually down at the 1787 level today. So it booked at 18 level. And the put-call ratio is still at 0.8, so it's inside of this 0.7 and 1. So although we see the VIX is getting lower, but the put-call ratio is not getting lower than 0.75. So that tells me there are a lot of market participants or hedging their position. And here we are looking at the up-down volume ratio, and it is not that impressive when the S&P 500 is up over 1%, almost, just a little bit over 1%, and the up-down volume ratio is only 2.1. And also the advanced decline is not that impressive because it's only 1,269 more advancing issue than declining issue. In a market environment such as this, we're expected to be somewhere around over 2,000 more advancing issue than declining issues. Now, the number of stock making new 52-week high is holding up fairly well because there were 179 stock made new 52-week high versus 7 stock made new 52-week low. And here, looking at the New York Stock Exchange cumulative AD line, you see how it accelerated up, and also the S&P 500. Remember, we were talking about taking out this high to resolve that positive divergence. So right now, the S&P basically had done that and took out this high. And looking at the NASDAQ market, the NASDAQ 100 was up more than 2% for the day, a little bit over 250 points. And the up-down volume ratio is 4.95, so 5-to-1 in favor of the up volume. And only 1,744 more advancing issue than declining issue. So it's better than the New York Stock Exchange, but not where it should be. It should be over 2,000. And again, similarly to the New York Stock Exchange, the NASDAQ market, new 52-week high, all holding up, and they are running ahead of the new 52-week low. So that is a good sign. And here on the cumulative AD line for the NASDAQ market and also the NASDAQ 100, you see they both are moving up now and also took out this high. And likewise, for this AD line. So again, never doubt the internals. So if we look at the price action of the SPY, you can see there are some critical level to keep an eye on to see who will take control. You notice that prior to the press conference, just right after the FOMC announcement was made, the bear was able to take it down to this level, and then the bulls came back and took it back up to this level, and then the bear took control once again, and then pushes back down to this level here, and the longs came in, the buyers basically came in and took out this high that tell you that the buyer has gained control and they are strong buyers. That pushes up, and the the short is trying to take it down, the bear trying to take it down, and once again buyers stepping in and took it back up, and once again the bear is trying again to push it down here, and once you get down here, the buyers that came in here to bought it back up also stepped back in and came back and bought it up. And now up here, we basically have exhausted the buyers, and you probably got some lick buyer trap long up here. Then the bears or the seller took control and pushes back down. And once again, when it came back down to this pivot here, remember this is one area where the buyers step back in and push it back up. So you see here, right near the close, that the buyer was trying to push it back up again. So right now at the overseas market, I'm not sure we're going to see this here on the extended hour on this chart here, but unfortunately we are seeing it, but it doesn't have a tick chart on trading view, so could not see that. But you could look at this. If we contract this back down, then we could see it is forming something like the tick chart of the head and shoulder, right? It's just that we just have the time element on this here. So once again, look at this low here. If it break this low, then basically break this this pattern here and take it down on the downside, right? But if it break this high, then it will take it up. So now for the high level, let me go and zoom this in for the time span, and we can see that, remember in the earlier video, the weekend video that I put out, we have the major move. Right, that major move is 416 and 415. Okay, so right now it's sitting at one of the resistance zone or the low volume zone that we could get rejection or get just go right to and come up to this 416. Now let me show you this option chart, OPEX open interest chart for tomorrow that I have plotted. And notice that I have pointed the arrow here. This is the call. The green line is the call, and the red is the put. So you can see the put. I have a wall here, a peak somewhere at 400, and notice that this the call and the put is pretty much even out at the open interest level, have the same open interest. So that is most likely, or other people call it max pain, maybe not, but I call it possible pin here. Possible pin that is somewhere around 410. Okay, so that's basically the possible pin for tomorrow. And also there's a call wall up here at 415. And these dashed rectangle is the expected move, okay, the lower range and the upper range. And notice here on the upper range is still within this 416 and 415, but tomorrow's lower range at 407, and that would be right down here at this edge of this huge consolidation of the balance area that I talked about on the weekend video. So if the price came down and pushed back into this balance area, that would get this 407 this low range in play, and that could also shift the the pin down to this level as well. So beware of that. Look for that 407, anywhere between 410 and 407 could be in play if the short or the seller take control tomorrow. Now remember the lower range that I just showed you on that open interest chart. It is around 407. Well, here's the 80% major move of this head and shoulder pattern. If it does form and it breaks, then you could expect this 407 and this 406 will be in play, because that would be the major move for the head and shoulder pattern. So be sure to smash the thumbs up to help promote this video. Thank you for watching and stay safe.